Good morning, viewers. My name is Maxwell Adombile of the Graphic Business. I am here with Mr. John Awuah on banking and more to discuss what he is doing here, what COVID means to the banking industry, what his vision is for the association, why he left frontline banking to come and do administrative work, and what generally his new stakeholders, the bankers, should expect. Mr. John Awuah, banking and more.
Thank you very much.
What brought you to administrative banking?
I would say I consider this more or less as a frontline activity as well. My job here is to coordinate the efforts of industry and give it one voice, ensure that things that generally affect the banking industry receive the kind of attention that it deserves.
Is this kind of a retiring job?
It's not. It's actually more involving, and the task here is very much nothing close to a retirement job at all. Why do I say that? The kind of activities that we engage in here, as I said earlier, is more akin to mainstream banking activities. There is not a law that will be passed that we would not have to understand and assess its implications to the industry, not just from the banking perspective, and also the impact on customers and our banking population, and also to ensure that our priority of making sure the industry has one voice is realized.
You come in at a challenging time, a time that the sector is stabilizing from a recapitalization and a cleanup exercise, and then here we are with COVID. Tell me first, what is the status of the industry? How is its response to the pandemic so far?
I think you are witnesses. They say we don't have to blow our own horns, but from where we sit, our assessment is that the banking industry has responded very, very well. We are highly regulated business. So banks are supposed to have what we call the business continuity plans in place. It's not just a plan, but arrangements, so that if there is a business disruption, we are able to fail over to other locations where we can still operate. So banks immediately, the COVID thing became enhanced and almost became a national emergency. Banks kicked in their disaster recovery plans and made sure that as banking industry we were classified as an essential service. And so during the lockdown period and the rest, we were still actively working working to make sure that the banking population had access to banking services. But the thing is, as a bank, we can't say we are happy until our customers are happy. The COVID thing is a national issue, it's a national agenda, and it's a problem that affects every one of us. Whether you are a banker, you are not a banker, whether you are banking or you are not banking, it affects all of us. So to the extent that the business disruption affects our customers and also the banks ourselves, of course, these are not normal times.
One of the challenges is if there's a lot of impairment, it affects the capital of the banks, and shareholders will have to raise another or additional funding. And that comes just barely a year after we recapitalize. What do you make of this? How do we manage it?
Yeah, and again, we may not even be sitting here if not for the fact that we have an unplanned event on our hands. Yes. And here I like to quote the regulator or the governor of the Bank of Ghana, who has said he sees the picture, the totality of the picture, and he says banks remain very strong in spite, because we are coming from a period of cleanup. So 2019 to early 2020, when the advent of this virus came, banks have remained very strong, and as we speak, banks are strong and they are liquid. The reality is impairment takes time to transmit or to step in. Even with the lending we are doing now, banks, because of history and experiences that we've had in the past, banks are extremely cautious, much as they want to ensure that there's liquidity out there to help with national agenda. We are also cautious that we do not go back to our old ways where things got out of hand a bit and we recorded significant credit losses. Now we are lending, but we are lending with our both eyes open and making sure that we are giving money to those who have the capability and to turn it around and pay back. The money is for the depositor, so when we give it out, it's our responsibility to ensure that there's recovery. So yes, we envisage that along the line there may be some pressure, impairment pressures, but because of the works that banks have done, we hope to, weather the storm when that happens.
When it comes to banks' responses to COVID, what do you think will set the individual banks apart from each other?
At the association, we like to be generalistic and we speak to industry matters, so we do not put one bank ahead of another or one bank below the other. But what I can say is, at the association level, as an industry, we have, we've discussed and we've implemented all the COVID protocols that we all know about, and even more.
Let's talk about banks and their customers. A recent Bank of Ghana report showed that banks were a bit unfair to their customers, and to use a blatant word, some of the banks were caught cheating their customers. They were charging fees that should not be charged. They were varying loan contracts without prior knowledge to the customers. What do you know about the survey that led to the compilation of this report?
Yeah, and I know that there is this regulatory market conduct unit that the Bank of Ghana has set up, or that seeks to check from the environment how banks are complying with various compliance requirements from Bank of Ghana, and also how we are treating our customers in terms of service delivery and promise delivery. When we advertise something, we should be seen to be delivering on that to the customer. We are a service organization, and we take customer complaints and customer issues very, very seriously. I can say, without mincing words, that every bank in this country has a service council where issues of customer complaints, customer matters of that represent semblance of maybe not treating the customer fairly, when it is brought to attention, it receives, when it's brought to the attention of the bank, it goes to the council. If people are found culpable, staff or whoever is involved, people get punished. And it is not an activity that banks actively go out to say we are doing this because of some additional revenue that is coming. But of course, we are a human institution.
This report was, I'm sure, based on complaints that the central bank received. In fact, it stated that in the report. And those complaints were a cluster of a certain perception out there that banks have, in various instances, been unfair to customers, especially to people who cannot read or do not really understand the technicalities of banking. So, don't you think that this report vindicates that thinking, that banks directly or indirectly cheat customers?
I do not want to contradict a report from the regulator, but I can say, without mincing words, that banks do not do that at all. It is not, there is not one single bank that will say we have a plan to make sure that whilst we are charging the customer 20% on paper, we want to charge 25%. There is not one single bank that you can single out as a corporate in that regard. But the point is, we work with systems, we work with people. There is that possibility that something may fall through the cracks. We accept. It's not like banks are out there not meeting the needs of our customers.
I appreciate that. Like we normally say, there's a Mensa in every house. From that report, it's obvious that not all the banks, not all the 23 banks are involved in that, but at least some. I'm sure your outfit know about them specifically. Did you engage them at a personal level to say this is something that has an impact on the wider industry?
No, we do not have the individual bank-specific reports. We have the aggregated report, and that is why I said that we have to maybe drill down further and engage the issue of the report, our regulator, and understand exactly where the issues are coming from. Nobody is saying that the report is not authentic. It is, but it is not like a widespread industry problem of banks not responding to complaints or banks out there and treating customers unfairly. I do not see that at all. I've worked in 6 different banks, and none of these 6 different banks had it as a plan to go out there to make life uncomfortable for the customer. At the association level, we are doing self-introspection. We are ourselves going out there into the market to test, the things that banks say we are doing, to see whether we are doing what we promised the customer. And when we receive complaints here at the association, we call the banks that are involved and we have frank discussions. And if we do not make headway, there are avenues for escalation. So we take that report very seriously.
Great. So we are still here with Mr. John Awuah, the former managing director of the UMB, who is now the deputy CEO and incoming CEO of the Ghana Association of Bankers. We are having a conversation on banking in Ghana. Let's now turn attention to digitization. That is one subject that is being used by the regulator, used by the bankers, used by customers and all that. In Ghana, we haven't seen the growth increase in ways that matches other countries like those in East Africa, especially. What is holding back digitization in Ghana?
Okay. We've made a lot of progress. We have made a lot of progress, and this, they say the positives, if I may put it that way, that we've all recorded from this COVID is at the adoption rate, the pace of adoption. The banks had already invested. The technology was there, the infrastructure was there. Banks had heavily invested in the last couple of years. Banks have put a lot of investments in technology. The problem we had was, as with any other change, moving the customer from the traditional mode of banking to these new ways of banking was a big hurdle. But during the COVID period, we had no choice. So we had most banks, I would say all banks, recorded significant jump in adoption of the various channels for banking service delivery. So, and I think our understanding of digitization as a country, and sometimes the people who speak on the issue, is not just limited to cash light or limiting the use of cash. It involves every operation in the bank. We want a situation where you go to the banking hall and you will not see papers. You go there and it's seamless. You go, maybe you put in a card, something happens, you get your money or you get your transaction, it's a transfer, you effect it yourself. The future of banking is not to have bankers, it's to make the customer the banker. So that the customer sits in his office and goes to his bank and does whatever he or she wants to do. So that movement, why we have been a bit slow, is also the pace of demand. When in technology and business, when the technology requirement is demand driven, the pace of adoption, accelerates the growth and development of the infrastructure. But in Ghana, because we don't challenge, we like to get, even with all these things going on with COVID, people still like to do basic things they can do on their phones and on their ATMs, still going to the banking hall, because it is a culture that we have to gradually shift. We have to gradually make life uncomfortable for people who do not want to join this train, because it is the future.
How do we do that?
I'm looking at a point where banks, bullion vans moving from market to market picking cash stop going. And market women will begin insisting that people should come and maybe pay with their card at their POS using their point of sale terminal. That is how you drive change. If you provide comfort, there is no drive to change. It is when people are inconvenienced a little, then there is push. What is the alternative? And then they go enjoy the alternative and say, we were just wasting time. All this while what we were doing, we're just throwing money away, staying and spending our day in traffic, when we could have done the things ourselves. So the banks are investing, but as the demand comes, banks will continue investing to drive, because everybody wants to be the one who did it first. And speed to market is of essence. Technology, the life of technology in this era is less than 2 years. After 2 years, it's gone. New one must come. So if you are waiting for customers to begin adopting it at 1%, 2%, by the time you reach your optimum level, that technology is obsolete. The era where we had, should I say, palace branches, gradually will disappear. We are going to have branches that will be the size of this office. You go there are machines, 1 or 2 people to assist with machine operations, and you still have your banking service. Why do I have to walk to the banking hall to fill a loan application form? When the bank has every information about me, all I have to do is to fill out the form online. It goes, there's validation process that comes back to me, I authenticate, loan is there. And then the bank goes through their own credit approval process to approve the loan. The next thing I see is maybe an alert on my phone, your loan is in your account.
What role do you expect regulation to play in this?
It is just to make sure that the system is secure and people operate in control. So it is important that we have the Payments Systems and Services Act, which is guiding the operations in the fintech, in the payment systems environment. There are a lot more regulatory directives or guidelines that I'm sure should be coming or will be coming, depending on how fast the market is moving. But what should happen is technology always goes ahead of regulation. So once it's going, which is for our regulatory authorities to also keep close touch with emerging trends. We need something to keep people in line because things move fast in the speed lane of technology. It moves very fast, and you need some controls in between to make sure that when you are undertaking the transaction, you feel safe, you feel secure, and you can do it without thinking about some miscreant sitting somewhere, standing in the middle between your execution and somebody's receipt and drawing your money.
Let's get a bit personal. You've worked in management positions in some of the key banks in Ghana, and now you are here as a CEO of the association. Should we expect your next move at the central bank?
No, I have a job to do here. Yeah, so the job here is quite big, and we have a business to ensure that our banks operate safely, and our banks have one voice, and we work closely with our stakeholders to drive value for the customer. So I don't have any kind of step into any other arena. What I have now is Ghana Association of Bankers to make it the ultimate advocacy group for the banking industry.
Who is Mr. John Awuah?
I'm a very simple young man. I've been around for a while, and I started my career with banking career, but I'd worked in other industries with Standard Chartered Bank. I've done something with UBA when they came as their chief finance officer. Then I joined Barclays Bank. I was the financial controller of Barclays, now ABSA. And then I worked briefly with EcoBank Capital as their group chief finance officer before joining GCB Bank as their finance director, to UMB as the CEO, and now here. I'm passionate about the industry. We have to make the industry what we see elsewhere. We should have a situation where banks in Ghana will be the institutions supporting the state to deploy the infrastructure deficit that we have, the housing deficit that we have, the slow pace of employment and the rest. It is when the cake is big that and everyone can get a bite. As it is now, banks are fighting over a small cake. We have a duty as an industry to grow that cake, and I'm very passionate about that. So basically, that is that, by the way, by who I am. I'm married and I have 4 children.
A lot of young people look up to you. You may know some, you may not know some. Speak to that young person, somebody somewhere who is looking up to you, aspiring to be like you, and even more. Speak to that person. How can the person make it? How did you get here? What lessons can the person pick from you?
Very simple one. When I completed university, if I had the kind of guidance that currently is available in the market in terms of people who are willing to handhold young people, I'm sure perhaps I would have been owning a multi-million-dollar business by now. The ultimate should not be to work for somebody. The ultimate is to be open-minded and ask yourself first, what can I do for myself to create the employment I am looking for? So I tell the young men I interact with is, let that be your first point of call. What can I do so that the employment I'm looking for, I'll create for somebody? But if you happen to find yourself in my trail, or my track, where I joined the employer-employee relationship, then it is not hard skill anymore. Now, the future is not for people who have chartered accountancy, I'm a lawyer, I'm a mathematician. It's people who are flexible and agile. People who can move from sales into technology. People who can do everything with minimum training because they are adaptable. So if you are watching, I encourage you, just be broad-minded. And the era of specialization is fast becoming thinner. And you need to be broad-minded and make yourself flexible and adaptable. At the end of the day, character is what shapes everything. If you do this and you have the right attitude and right character, the sky, they say, will be your limit.
Great. Character is everything. Thank you so much, Mr. John Awuah. We've had a chat with Mr. John Awuah, the Deputy CEO of the Ghana Association of Bankers, and he's penciled to be the CEO later in the year. We are grateful for your attention. See you next time.